Very good morning, everyone. Boris, Frank, special good morning to you guys that are awake with me this morning. So, we have a couple of good opportunities, I believe, in the market today. We'll start from the top as always. I'll try and be as quick as I can, therefore, to let you guys go and then get on with your trading day. But nevertheless, the DXY, I think it's in a nice prime position potentially for a bit of a move towards the downside. I'm sure by now you can see the caveat to that, and we are by way of the 4 hour 50 EMA that of late, if we go straight to the 4 hour time frame, we've broken above, which was a little bit disappointed. I was hoping rather that we just reject this area, reject that order block, and close out of it to the downside. But it is what it is. So we know we have some traffic on the way down. If we are to take any, let's say, long positions using DXY weakness, we want to be really managing that by the 4 hour 50 EMA, in my opinion, on the DXY, because if that is respected, we can certainly understand why that could be the case. Because look at most recent price action, we're bullish. We haven't made, let's say, higher highs and higher lows, but in terms of most recent intraday perspective, that's a high. Here's a higher low, higher high, higher low into the 4 hour 50 EMA, higher high potentially to be created. So we're not going to take any blind sighted short positions just because they look good across the cross pairs. If we are going to get involved, we need to be managing those positions by the catalyst, which Boris is very well familiar when him and I were going pretty much solid from the start of the year. But just using the DXY as a full degree of confluence when I started introducing it, we understand what happens when you don't really master the DXY and just enter positions without thinking about what's going on elsewhere. The DXY is really ruling the cattle, let's say. So best case scenario, I mean, the DXY, this 4 hour candle is going to close in the next 26 minutes. So let's hope we close bearish. We close bearish, and I think we're full game for pullback, and then look for the short on the DXY, which would be a pullback on, let's say, GU, EU, and AU, we hope, and then we'll be looking for the long continuation, perhaps. So let's go through that now. In terms of the weekly time frame as well, you can see we're in that higher high, higher low type of scenario. The reason why I'm looking for price still to move towards the downside, because we have a little bit of room back down towards that daily 50 MA. And if we have a look at the daily time frame, bottom right hand chart, we can just see very clear or clearer the fact that we've made highs, looking for that higher low, potentially had a bit of a range in the immediacy. We've broken out of the range, hence why, well, broken out of the range on the 4 hour time frame, in my opinion, judging by this 4 hour candle closure below. So now we're looking for, in terms of internal structure, lower lows and lower highs on the way back down. If you don't think about the 4 hour 50 for a second, and then higher time frame structure, we can understand why we could see a little bit more of a pullback down towards potentially that daily 50 MA, but even more importantly, this weekly order block, which when that is refined, we're down here on the bottom right hand chart. So I think there is room for maneuver to see the DXY move slightly shorter, which should give us those take profits across the cross pairs. Then, of course, when we look to refine those areas down in terms of looking for reasons why the DXY could look for a short, I'm looking at price action and structure. We had a good move towards the downside here that broke all most recent lows to the left-hand side. So then, of course, when prices come back up to that area, we're expecting a reaction. We haven't had the reaction, but we're certainly respecting that order block. So just looking to manipulate those alerts when they go off. I'll have that certainty that we are now moving towards the downside. And then what this 4 hour candle bearish should give us, or would then give us, would be significant breaks of structure towards the downside on the 15. We would be looking then to isolate an order block that caused that break of structure, and then use that as the confluence to take, let's say, a long position on AU, GU, or EU, or even a short position on US dollar CAD. So let's have a look to see what is available today. So I've given GU and amber, so we'll start with that first and foremost. I think that's because of the conflict that I can see between the pairs. So we'll start quickly with the weekly time frame. Weekly, blimey, that's been a while since I've had a look at that. So where are we? Weekly time frame. We've made a low here, haven't made a high. Here's a lower low perhaps for a pullback short, and there is that order block up at those highs. So let's have a look at the daily time frame where I can see the picture as probably a little clearer, and I'll be able to explain it a little bit better for you guys. So EMAs that I can see clearer. We've got the daily towards the upside, and most recent price action has broken structure points to the left-hand side, meaning that in terms of the daily, this could well be the conflict that I was talking about, or perhaps not. So we've had a low. Has that been created or respected? Nevertheless, what I'm seeing now is a high, higher low, potential higher high continuation. So potentially this could then change itself from an amber to a green. Let's see. So daily 50 MA respecting that towards the upside. We do not have any daily order blocks available in the area. But if I was to refine this previous daily order block that's available, straight away we're going to come out where we've got the 4-hour order block anyway. But let me just double check myself. Yeah, so this daily order block that was as a result of this bullish engulfing candle just here, we're now refining this area down and we're just here on the chart, 4-hour order block. That corresponds very nicely to price action and structure. If we print it out in its most basic format, higher highs and higher lows, in and around these areas is where I'm looking for that reaction. The only annoying part is the 4-hour 50 MA. I'd like it if it was here. It's not, so we'll roll with what we have. It's slightly higher and price is already respecting it towards the upside. So here's where I am at the moment. I recognize that we are in that uptrend. I'd be happy to take a long position if price comes back down to this 4-hour order block. And then we've got this refined area 15, which has already been tapped into. And then we have this another 15-minute order block just underneath it. So let me explain why I like that one. So of course, this 15-minute order block is refined all the way from the daily time frame. So daily 4-hour and 15 price respected it. However, if you were to ask me, not looking at higher time frame analysis, would I be wanting to use this 15-minute order block or the one down at the lows that, in my opinion, would have caused the move towards the upside? For me, it would be this 15-minute order block right there at the bottom. There would be no reason really for me to say, I know, move a couple of order blocks higher. I just wouldn't know to do that. So the fact that we're getting a reaction from it looks good, but what's that reaction actually doing? It hasn't broken any structure points towards the upside. That would then tell us, well, in fact, we're now looking for that high pullback and then look to take the long position in line with the daily, in line with the 4-hour. What I'm seeing at the moment is this is just a pullback. On the lower time frames, we've made a low, lower high, lower low. So of course, anytime price is be or below this area that caused that most recent low in the market, we're still bearish. And this is why I've given it an amber, because I'd be happy to take a nice Asia range position short based on what we just explained at the moment, the fact that we're on that pullback phase. We recognize that price could want to gravitate back towards the better order block that, let's face it, in my opinion, it would make more sense. As I say, I wouldn't know to put an order block here and not here. I agree it's refined within the area, but I wouldn't say this is the order block that certainly caused that push towards the upside. So my thought process at the moment for GU is that GU is, or I shouldn't say is, GU could roll back down here. Now, the reason why I would like that to happen, or how I'd be able to get in a position for that to happen, would be Asia range. So what I can see now is that we had that low created in the market. That's clear to say, and see rather. Has it broken structure points to the left-hand side? Yes, it has. We have that session high still from yesterday that I took a short position from, but nevertheless, we've got an order block as well. So what I'll be looking to do as soon as London opens, ensure that Asia lows is still available before taking this position, of course. Even if Asia lows, and this is why I've kept the session high on there, even if Asia lows is broken towards the downside, I would still take that short position based on the fact that it's a session high paired with the fact there is a 50-minute order block as well. So using my discretion, that would be, so it wouldn't be an Asia range short. I would use Asia as a confluence if it hasn't been filled, or rather, let me start that again. If Asia has been filled, then the position, of course, is not going to be an Asia range short, and we will lose the confluence for the Asia range. But what we would have, hopefully, is a break of structure towards the downside that's now created a new low. Now, once that new low has been created, I would still take this, but even more aggressively. So I'll look for a 1 minute break of structure up at these highs, regardless of Asia being filled or not. So even if Asia has been filled, I'll still look for my 1 minute break of structure and take the short position down. And that's the same if it has not been filled, just a standard Asia range criteria. So that's the reason why I'll be looking for the short. I wouldn't, well, where would I be looking to manage that? So, of course, the annoying part of all of this is the 4 hour 50 EMA. So I need to be managing my short position by the 4 hour 50 EMA. To be honest, by the time we look to get into that position, what would I be looking at? 10 to 15 pips stop loss. Blimey, that feels so big. Yeah, so management by the 4 hour 50 EMA probably wouldn't be a take profit for me, I'll be honest. So rolling towards break even probably be the best that I can do. But in terms of my take profit, it's going to be there. So I think that's a pretty nice looking position. And of course, once price gets there, we just have a quick look at the DXY to see if it still makes sense, i.e., is the DXY in a position where we can anticipate a potential move towards the upside just short term, which of course would then give light to the pound seemingly weak against it. So let me just quickly double check the DXY to see where that could be. So a move on the DXY towards the upside. So I'm looking at this order block just here, again, based on 50-minute structures only. Why am I looking in that position? Where if I look at most basic format of price action in the immediacy, despite what we've already spoken about on the higher timeframes of the DXY, we recognize a short position on GU could be quite a short-lived one based on the 4 hour 50 MA anyway. So despite where my targets are, we recognize the 4 hour 50 MA could put an end to that bias. However, what we have here is a high created in the market. Therefore, I expect price to want to gravitate back towards that 50-minute order block that's available that created that high. Now, the reason why it's this 50-minute order block is because the last time I checked, there wasn't another one available. And no, there isn't. So we just start to move that process up. So we can say a high created after a high, expecting a higher low. We're getting DXY weakness at the moment, but in my opinion, that's just creating that leg extension for us. Then use that short-term strength, come back into the market, and then we'll use that to take, well, I'll use that then to take a short position on GU. So I like GU in the immediacy for that short-term short position. The only way that I'm going to have protection with that position is going to be by waiting for a 1 minute break of structure, and then I'll look for that short position down. With that said, I can definitely understand why that position can go against me. However, at the moment, until proven otherwise, by way of price actually breaking above, I have to remain bearish on my intraday perspective, despite what's going on the higher time frames. In contrast to that, then I do like the long positions as well because of all of the higher time frame directional bias. However, to get the best certainty for that long is just going to see this wiped out because we are still bearish on those lower time frames. So once I get a push up, potentially if I'm able to not take a loss on that position and price just smashes straight through that area, I wouldn't mind seeing that either. Then I'll wait for price to pull back into an area that caused that break of structure, and then off we go towards the upside. So I've got alerts galore everywhere on that. Price coming down, price breaking above. And I'll just see how the cookie crumbles for the long. In terms of my long, well, I know in around that 4 hour 50 May is going to be the better area for the long to take place. However, the 4 hour order block is slightly low. It's been mitigated already, and so has this 15-minute order block. So the only really one that's available that I do like is this one down at the lows. Let me just quickly double check myself before I move on to another pair. Now, this is only really based on the fact if we get a break above, then I'll be prepared to start moving my 15-minute order block higher but then I'm going to need confidence from the DXY to support why I'm just going to put a random 15-minute order block in this leg to support that, to take that towards the upside. But what we can see, or rather what we can still say, is if we drag this across, we are still looking to refine an area down within this 4-hour order block from the daily. However, as we start to move higher, we're probably going to get out of that and going to have to start the process again in terms of selecting a 4-hour order block that makes sense. But at this time, because we don't really have even the 4-hour order block breaking, let's say, or 4-hour candles breaking these areas, it's then difficult to just select a 4-hour order block that hasn't really done anything just yet. So I'm going to stick with the 15 and wait to see what's going to happen towards the upside. And then we might then have to start moving our 4-hour order blocks higher, refining those down to the 15 as well for those positions to make sense. So that's what I've got at the moment for GU. In fact, it's probably not going to be an amber. I quite like GU for the short position down. And I'll be looking to take that first thing. If I get a 1-minute break of structure, I'll be happy to take a short position from session highs and that 15-minute order block that's caused that low in the market. So I think that's good confluence for a short position on GU. I hope that makes sense, guys. If it doesn't, please let me know, and I'll ignore you. I'm only joking. I'll try and explain it again. So that's what I've got for GU. EU has got a green light for whatever reason, so let's have a look to see why. So weekly time frame definitely made a low in the market after a low, expecting a pullback for a lower high. Then we look to anticipate that on the lower time frame to see if we can find it, or rather see if we can trade that extension. And then, of course, based on a higher time frame directional bias, then the short position from that weekly 50 MA, daily 50 MA as well, where price just, I mean, it's really nice to see. I mean, price is just trending beautifully. Look at the daily, clear lower lows, clear lower highs. We can clearly anticipate in the market where we could see a potential turnaround from. I wouldn't say it's unfortunate, but refined within this weekly order block just here, the daily order block is quite a distance away. But what that would do is just give reason for us to actually want to take, let's say, a long position back into that higher time frame order block before taking ourselves out of the position and switching our bias back down for the short. So I think there's good range for both positions at the moment. Then if we look to the daily, we've spoken about the daily respect and the daily 50 MA clearly in a downtrend. What I'm seeing at the moment potentially is this, unfortunately. So a bit of a daily range. I wouldn't even say a bit of a daily range. It's pretty clear. And usually we'll find ranges at the end or at the beginning of a new trend. So we have trended nicely down on the daily timeframes for a considerable amount of time. So potentially that could be the turnaround to bring us back up to these areas before then the rejection from the positions that we've already spoken about. So we'll have a look at that as well. 4-hour time frame. So predominantly we're looking at taking long positions back up into those areas, in my opinion, at least by the time we get, let's say, to the weekly 50 MA or daily 50 MA, sorry. Of course, in the immediacy, we can still look at 15-minute time frame only to take, let's say, a short position if we feel that it makes sense. And we'll use that based on structures and principles on the 4-hour time frame. So what do we have on the 4-hour time frame? What I'm seeing at the moment, despite a potential daily range, what I am seeing is that EU can trend nicely to the downside. At some point in time, we're going to have to say that structure's broken to the upside. Got a first structure point in here, which would have been guesswork in the immediacy. High created, higher low, confirmed because of the higher high. Come back up into the area that, or back down rather, into the area that caused the initial break, and we've made another high from there. So we're looking to ride the back of that 4-hour trend back up into this area before then potentially swapping the bias down for the shorts. So how can I look to support that long position? Most recent high in the market, it did leave an order block behind. So that high left this order block behind just here. Price is respecting it at the moment. So what's probably best that I do is make that slightly smaller and say, well, we're moving on from that. And is there anything available just in case I am wrong? So that runs into this order block anyway. So I think this is the order block to potentially look for the reaction to the north from towards the upside. However, again, the caveat being the 4-hour 50 MA, which It's annoying, but when it's on side, it works in favor. And it's just one of those that when price then pulls back down to the lows of that 4 hour order block, just want to be managing the position by the 4 hour 50 MA because we know what can happen. We recognize that price is now broken below. Price can run into it and start moving towards the downside. We understand that. However, structures, I think, will take precedence at the moment in terms of looking for that higher high. Again, we've got 2 hours for this current 4 hour candle to close. So who knows how that 4 hour is going to close? And of course, ideally, bullish 4 hour candle above the 4 hour 50 MA. What that would give us is significant breaks on the 15. We'll be looking to isolate the 15-minute order block, refine within that area, and then look for the long continuation. So EU looks good thus far, in my opinion, for both directions. But at the moment, the 15-minute. This is the a little bit of, it's better I make that bigger. This is the bit of, what can I say? A little bit of conflict that I'm getting out of the market. So if we go bigger picture first, we can say high creating the market. Of course, we then expect price to come back down to this area for a reaction. What I'm seeing here is if I take this as the facts, that's broken below. But then again, the fact of the matter is, if Price doesn't want to respect my pretty illustrations and goes for just this low in the market, then we haven't broken. So, what I'm more inclined to do is just try to understand what's going on in the higher time frames to support that. Okay, this order block has been broken to the downside, which could actually suggest a low, lower high, lower low. Alternatively, it will just revert back to what we thought initially, high, higher low, reach for the higher high. So I'm going to go with that at the moment. And potentially then the reason for me actually wanting to say that this is a break is to understand, well, is there an Asia range position potentially available? Now, the reason why I've kept this on there is just to explain why I probably won't take this as an Asia range, because first and foremost, we've got Asia available just here to those highs. Let me get my illustration thing out. Asia's available here. Asia's available here as well. So it's one of those where you're trading an Asia range and then having the expectation that, well, the previous Asia, well, that's not going to fill and that's not going to fill. So I know it's a standalone strategy, and if it makes sense, it makes sense. But again, the second part to that is, well, has the clear break of structure to the left, i.e., if this is the structure point just here, can I say that structure has been broken from here? Or would it make more sense to say structure is actually broken from that entire leg extension? And that if I were to take an Asia range, ideally that 15-minute order block would want to be up at those highs, and the Asia range will look a little bit more like that, as opposed to what we have currently looking like that, with the risk of Asia above to the left here and also to the left here being filled and wiping you out of your position. In addition to that, then it's a bit unfortunate because with a 10 pip stop loss, you probably would have the range actually to get something half decent from that. But it's one of those, just because the position is showing up on the chart, it doesn't necessarily mean you have to take it. Of course, we might well see a reaction coming out of here, but it doesn't necessarily mean that that's the position that I'm going to want to take. I much prefer the previous Asia range that we've discussed. I've already forgotten the pair. Was it GU? Yeah, I much prefer GU than EU because it doesn't leave for any discretion here. It's very clearly on GU a break of structure to the lows from what I can see. From this area here, we've broken a structure point to the low. So come back, I'll take the short. In addition to that, if I'm going to look to take this Asia range probably sooner rather than later based on the range, that would mean that GU, which is, no, I'm stretching there. It's probably the same distance, to be honest. It's just if you are then to put these parallel against one another, what's clearly broken structure, GU or AU? Excuse me, GU or EU? For me, EU, excuse me, GU has clearly broken this structure point to the left-hand side with no question or doubt. EU, on the other hand, is difficult. We've still broken structures here to the left. I think personally, I'm going to go with GU opposing to EU. It still makes sense. but it has its own risks here with this area just up at those highs. With that said, that's just one strategy based on 15-minute time frame only. I like potentially if we could, it's the same, to be honest. It's the same as GU. If we're able to break structures towards the upside, then of course I will look for price to return. If you can see beyond all the illustrations, price to break above this structure point that caused a low in the market, break above, pull back, use that 4-hour 50 MA in favor for us to then take price back up towards that daily 50 MA where we can then look for potential rejection based on the performance of the daily 50 MA at present, which is looking pretty powerful, to be fair. So I'm happy to trade into that daily 50 MA, manage close positions, take profits out. We've still got very good range back up to there. And then you can see the liquidity beyond the daily 50 MA that you could understand where price would look to want to gravitate towards before the reaction. We can see towards the left here, we've had that low in the market. So I think that could be where price is headed. We can see to the left how price is stepping up on that 15-minute time frame. And these are just the ebbs and flows of price action, to be honest. And it's down to us to then manipulate it, take price where we think take action where we think price could well be heading. So GU, EU, pretty similar, to be honest. I'm splitting hairs, trying to find a clear difference. But for me, I'm going to go with the compare. I mean, it doesn't matter. To be honest, I prefer GU personally, and we use DXY as confluence with both of them anyway. So if you're only an EU trader, then go for EU. If you don't mind, then for me, it's going to be GU favoring EU. So that's what we have there. AUD US dollar. And again, Boris Frank, if it doesn't make sense, please be my guiding light to tell me, Charles, you're talking absolute rubbish. Can you repeat all of that again, please? I'll do my best. AU, it's becoming a bit of a favorite. Actually, it had let me down previously in terms of wanting a short from higher time frame points of interest, but at the moment, it's kind of playing ball. If you're happy to be patient enough, I think AU is providing a lot of good returns. So higher time frame order block towards the top right hand chart weekly. That's as a result of clearly price pushing up towards those highs. So again, basics, higher high, higher low. Where could that come from? Weekly order block that caused a higher high, supported highs or supported long by the weekly 50 MA, refine the area down. You can see we're in the daily time frame, but the crux of it is we're expecting a reaction towards the upside. Not really bothered about creating a higher high on the weekly. I already know I'm not going to be holding that position. I just want a reaction from a refined area within that market. So therefore, refine this weekly order block down. Here we are, daily time frame. It really did the business in terms of respecting that daily order block. And what we can see on the daily, a nice clearer picture as well in terms of that high created. Price then wants to pull back towards the area that caused the high. It was refined daily, respected it beautifully, had a bit of a hold up, and now we're off to the races. Now, the caveat to that, daily 50 EMA being respected. As well as that, what I've done is I put in a daily order block just for argument's sake to see what's going to go on. The reason behind it is we rejected an area and we had a wick to the high. So that's fair enough. It's not really a bearish candle, but we're seeing a rejection. We then had another rejection, a rejection, and a rejection. Today, we are still, well, until this candle closes, I have to lead with the anticipation that perhaps we are still going to continue to reject that daily 50 MA to the downside. So would that make sense based on the higher time frame, based on the weekly? Not really, I'll be honest, but certainly on, let's say, the daily time frame, you could argue the point that it could, because what we have here, if I get rid of this longer term outlook, what we can say on the daily is that we were making lows, lower highs, lower low, hence why I put this order block in the, well, rather this order block and this order block in the market. This order block, to be honest, where we currently are, is based on the daily 50 MA only. However, if we say low, potential lower high for a lower low, we can understand maybe why AU could short from this region. So if we go to the 4-hour time frame, of course, what we're going to see is a beautiful 4-hour bullish trend towards the upside, which will make me think what I'm doing doesn't really make too much sense at all, but for the daily 50 MA. So we've got two real ways that we can approach this. You can say, well, get rid of the daily order block. And in terms of my long positions going in, I just want to be managing my trade by the daily 50 MA, where I'm going to anticipate a reaction from it. Now, the fact that we're at that daily 50 MA, what I'm really looking to do is understand, is a potential short position available by the time London opens, if not even sooner. So originally we had this daily, excuse me, 4 hour order block refined within the daily time frame. We had good rejection from it, a good move out of it. Unfortunately, now we have recently closed above it. Uh, Only, to be honest, this candle here, but nevertheless, we have closed above it. Hence why I've now moved it to the side to understand that, okay, I am potentially still trading from a daily order block, but that daily order block is only guesswork, I have to admit. And I don't have that higher time frame directional backing by the 4 hour order block. So I'm kind of trading blind based on my higher time frame directional because it's just a daily order block that suits the chart based on the daily 50 MA. So in order for me now to take a short position on AU, despite it looking quite nice, let's say on the 15-minute time frame, if we were to say it looks nice, I'd have to wait for significant breaks of structure towards the downside, particularly because we are now making new highs. So I don't want anyone to get caught up in the fact that we're making a high. Yes, we have pulled into a 50-minute order block that caused a potential low in the market. But what's going on right now is we've made a new high. So, of course, after a high, we are going to get a reaction to the downside. But that reaction, in my opinion, you want to see it breaking structures, then pull back and just be very patient and look for the short position down if it makes sense. Because currently, we can make it make sense, which is what we've done. But based on the technicals, it doesn't really make absolute sense at the moment. So I just want a bit of certainty before looking to take an AU position. With that said, of course, you have an opportunity, let's say, no, because it broke structure and now it's broken above. Yeah, while I was marking the charts out, I did see there was an order block here, but since then we've closed above it. So this really is the only valid order block that's, I'd say, available within my thought process. If I'm wrong here, then I'm going to be wrong for a very long period of time, I hope, before I can take a higher time frame directional short position back down. That would be from this area here on the 4 hour time frame. So that's quite a distance away. So more often than not, I would be quite aggressive going there, because I wouldn't mind being wrong there, but I wouldn't mind being wrong if I wait for something at least. And then if I take a short position here after seeing price break towards the downside, then I really don't mind being wrong. At this time, I think I'd be quite annoyed at myself if I was to take a bit of an immediate short position there. It looks okay based upon information from the left-hand side, but I think we can do a little bit better in terms of anticipation what could go on. So it's just as simple as higher highs and higher lows, higher highs, break of structure, i.e. most recent higher low that caused a high, pull back into the imbalance and take that short position down. What can be done is, of course, we recognize that this is the structure point in the market. So therefore, if you're going to take on, let's say, a 1 minute type of position, so we are within the 15-minute time frame, excuse me, 15-minute order block, what you are able to do if you're confident enough to do it, I'm not going to myself. However, you can take an aggressive short position, but you really want to be moving that to break even sooner rather than later. And what an aggressive short position would be, of course, on this leg extension. Well, let me take you to the 1 minute and I'll show you what I mean. So here's a 1 minute time frame, same trend. So higher highs. Oh, my screen's gone missing. Okay, cool. High highs. Ooh, to be honest, it's not that different on the 1 minute. Here's a clear structure point. So what you're able to then do is isolate more immediate structure points on the 1 minute time frame. Now, this is very high risk, and I would do this usually, but once I've had my confirmation by way of a break. So we don't have that. What you're able to do is do something exactly similar to that. If you're liking AU, you need the order block up at the highs on the 1 minute time frame first and foremost, have the break of structure pull back, and then you need to be going break even by the first break, because the break below could just be, oh, wrong direction, highs, higher lows, you've entered, potential comeback for that high. So that's what I'd be doing more often than not, but I don't have the evidence to do it just yet. So I'd say leave AU just for a second, personally, and wait for some confirmation. There's a lot of other good pairs that you could be looking at. So that's AU for the moment. And then, of course, up at these highs, then absolutely, I'll be looking for a short position down. That's based on refined from the daily and then 4 hour. And then the 4 hour looks, in my opinion, I'd say if you were to say, has the low been created from this area here, the area that we were looking to manipulate, i.e., the random daily order block in the middle of nowhere, or would you say the break of structure or the low has been created on the 4 hour from up at those highs? So that's really the difference. So here it's more reaction, here it's more price action. So that's why I'm a bit hesitant to take a short at the moment, because I recognize this order block. I've only put it in because of the daily 50 MA. The 4 hour made sense. The 4 hour order block made sense at a certain point in time. It's now gone, and we can see how price is pushing towards the upside. So that's AU for me. I think I've spent enough time on that one. Again, if it doesn't make sense, guys, please let me know. Cool. US dollar CAD. That's got an amber because there definitely is a conflict there for me personally. So we'll talk about it. Higher time frame, weekly order block. It looks beautiful. We've come into a weekly order block. We've refined that order block down. We've had the move towards the downside. It's exactly what we'd want to expect from price coming out of a higher time frame weekly order block. It just is what it is. It's the only order block that's available. We had a move towards the downside. We've highlighted it, refined the area down, move towards the downside. So with that said, here's the daily time frame bottom right hand chart. You can see just how we've turned around from that weekly order block and refine within that weekly order block. If I scoot to the left, you can see there is the daily to the left hand side as well. So it's all starting to make sense why we would seek a reaction from that area. With that said, then, if I bring that back to most recent price action for a moment. With that said, we've now shorted down into, again, the daily 50 MA, where we've had a reaction from. So my immediate reaction is to when I'm seeing a reaction from a point in the market that I wouldn't ordinarily be looking in, because I recognize that the move has come slightly lower, but based on an intraday perspective, I need to be a little bit quicker to the charts, i.e., what's going on sooner. I'm not just going to wait for these lows. I understand there could well be a position in here because of the daily 50 MA. So I'm looking to make the story make sense based on the technicals. Here's a daily order block. It's being respected at the moment towards the upside. And yesterday, I love that daily candle because it smashed all the previous ones, just about engulfed them as well. So I'm happy to start using this area in the market. The fact we had now an engulfing candle allows us to select an order block on that particular time frame as well. So if I move this order block across, that's been used, it's done its job. Yesterday's bullish candle then delivered us with the engulf. Here's a daily order block. So now I'm happier to start using it because it's proven itself. So now we head to the left-hand side, to the 4 hour time frame, to understand what's going on. So 4 hour 50 MA is coming into the mix, but I like that because it's just telling me don't be complacent. You've got a good range. If you're going to look to take a long from the daily, you want to start potentially looking to manage or take profit by the 4. And I'm asking myself, well, why would that make sense? Well, let's look at the performance of the 4 hour 50 MA. Beautiful respecting on the way up. We've broken below. First sign was a clue. We then made the low, pull back into the order block. Off we went, respected it nicely towards the downside. So I'm not going to be complacent in my long positions. I recognize what can go on. Now, what I also love about the 4 hour time frame is, of course, based on structure, it's not as clear and clean as you'd like. But what I'm seeing is just based on just eyeballing, I'm going to call that a break of structure. Even if you were to use this area just slightly, using as many of these wicks as you possibly can, some of the bodies, I'm going to say that's a break of structure, because at some point in time, I'm not just going to wait for that and then the pullback to say, okay, we've broken structure in the four hour time frame. Let's now look for a long position. Because of the degree of length of that leg extension down, I have to start isolating an area sooner rather than later. So I'll start that on the 4 hour, and then I'll use the 15 to confirm it. So at the moment, if I place this on all intervals, i.e., well, most importantly, the 15, my interpretation of a break of potential structure point, I think it's even lower just here. We'll then use that on the 15 to see if it makes sense. But what we can see at the moment, daily order block, refine that down, 4 hour order block, it's available, waiting for pretty much the technicals, higher high, higher low, higher high, potentially into the 4 hour 50 MA. And my opinion is that actually we will move slightly higher back towards this better area, which would make all the good sense to take longer term short continuations based on a higher time frame analysis. So I like US dollar CAD actually in both scenarios. We then head to the 15-minute time frame to see how it makes sense. So I had this potential Asia range towards the upside on. But again, if I'm going to take an Asia range today, I just really like the GU Asia range that we spoke about. But nevertheless, we'll go over this as well. But based on our analysis thus far, I think down at these lows is going to be for a nice looking long position. And the first and foremost, this is that 4 hour sort of type of point of interest in the chart where we just where I called a structure point. If I'm wrong and start to move that even higher on the 15, we still have the 15 confirming those breaks of structures. So down at these lows, I'm going to be quite aggressive at taking a long position. I think that looks very nice on US dollar CAD long. In the immediacy, again, structures for Asia range towards the upside. Here's a 15-minute order block that's in the market. Now, it's difficult, and I like when it's difficult because then I have to ask myself the question, if that 15-minute order block, why not that 15-minute order block? And the fact of the matter is, why not this 15-minute order block? So forget about the colors for a moment. I don't really have any right or reason to say that this is a 15-minute order block that Asia range is going to look to respect towards the upside, fill Asia, and then move towards the upside. So for me, it's waiting for the clearer. Although this is clear based on a 50-minute trend, I don't know. And there isn't a way for me to know until it's confirmed. So the fact of the matter is it's a 50-minute order block. What I'd be happy to do or see and act upon is, if price doesn't want to come down to these areas, which is going to be what I want price to do. Let's say price respects this order block and pushes towards and moves towards the upside, then that's my confirmation to take a long position back up. So it's not that I'm going to take an Asia range now. It's just if I see a snap in the market, let's say, and that would just be a standard snap and retest position based on the 15-minute structure only. And I could look to anticipate that based on highs, higher lows, higher highs and lows, higher highs and lows, higher highs, higher lows, and off we go. If we get that pullback, start moving things slightly higher, then this becomes an area in the market where I might want to look for a long position from. But with that said, it's not going to be an Asia range type of position because at this point in time, I don't know what 15-minute order block is going to hold. The happier order block that I'll be aggressive on is this one just here. But in terms of anything else, it's just guesswork. And when it's just guesswork, I need confirmation to support my guesswork, and then I'm happy to take a position from it. So that's US dollar CAD at the moment. I like it. Let me just think about where we are with this 15-minute order block. Why have I put that in the chart? Not too sure why. Low, low, high, low. Lows created. 15, 4 hour order block. No. So this is just, there's another random 50-minute order block that again, I will not be taking immediate shorts from there. In fact, I won't be taking the short from there. I'm just going to get rid of it because it doesn't make sense to have that on the chart. Here's my area that I want to wait to take a short position from. I think that makes all the good sense based on higher time frame analysis as well. And then this area, it could be confirmed, but I want to see a snap in the market first and foremost. And then ideally, I'm hoping that we just have a nice gentle move to the downside here, and I'll be aggressive and take a nice long position managed by the 4 hour. And I'll probably, yeah, you can have my word for that one. I'll manage it by the 4 hour 50 MA, but I will hold that position back up because I like the higher time from directional trade. And if I believe the price is going to get there for me to short, then it's yeah, I'll go for it. Then why not hold that position back up? So I'll move towards break even and I'll see how the cookie crumbles for that. I think that could be a bit of an ego play because I haven't had a 1 to 10 in a while, and we'll see if we're able to grab something like that. US dollar CAD, so max of 20 pips, that's about right, to be honest. So 1 to 7 is a potential. We'll see how that goes. But what's more important is look at your range of the 4 hour 50 May. That's very sensible. So on my personal accounts, I'll do something like that. On my managed accounts, investments accounts, it's very simple. Take your money where it makes sense. And that for me makes all the good sense based on all of the information we have across the charts. So that's US dollar CAD team. Let me pop an alert up here in case I'm doing anything. And alert, alert, and alert by that 15-minute order block. Cool. I like US dollar. Apparently, I didn't like US dollar CAD, but it's not too bad. It's just definitely not a favorite. Let me just check GU for a second. Nothing there. EU, nothing just yet. And DXY. Okay, we are rejecting that 4 hour 50 MA. So hopefully no. 4 hour candles closed, rejected it. That's okay. We'll still see if price wants to pull back towards those highs. And after some breaks of structure on the 15, we'll see if that pulls back. Cool. So where were we? GCAD. GCAD has gone missing lately. If I was aggressive on GCAD, it would have been very good news, but I wasn't, so it is what it is. A higher time frame. There's nothing really to speak about on the weekly. Just the fact of the matter is we made a high after a high. What are we expecting? A higher low. A higher low would be price moving towards the downside. And that's essentially what we had. And it's as simple as that, really. And what that has done, that movement, is just leaving us with order blocks behind for us to maybe pick up some scraps if price kind of gets back there. So that's all I have for the weekly time frame. Aside from that, of course, the weekly 50 MA that's gently coming up, and now I've got a weekly order block in on the chart. Let me just double check myself to understand, does that weekly order block make sense? So nothing, 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 nothing on the way up, nothing here. And then, yeah, so here is the only weekly order block that's actually available. So hence why where's the screen gone? Hence why I'm expecting price to want to gravitate back down towards that, refine the area down, lower, 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 4 hour, and then potential continuation back up towards the upside. If the pound wants to remain strong against the CAD, of course, that is. Daily time frame, it just supports what we've already just explained on the weekly, to be honest. We've had a high created and refined within that area is that daily order block just here, supported long with the daily 50 MA. It's all making nice, good sense. Expect rejection of the daily 50 MA, expecting the rejection of the daily order block towards the upside. For me, it makes sense. Have a look at the performance of the daily 50 MA. It's doing the business of late. So if it comes back in, of course, expecting what? Just a reaction. And that's what we're in the market for. Now, what do we have at the moment? Of course, on the way down, we're leaving reasons to short from. At one point in time, the reason why I said if I was aggressive, it would have been great, but I didn't have a reason to short just yet because we're just up at the highs. It doesn't mean just because we recognize higher high, expect the higher low short instantaneously and take a reversal position. That's not how we trade. We wanted to wait for those breaks of structures. It's just those breaks of structures never came and price just melted towards the downside. It's just unfortunate. It is what it is. What I did have on the chart would have been a daily order block that I'm going to put back on and then see if those refined areas still make sense. So as price moved towards the downside, it left one daily order block behind, which is here. So let me just put that on the chart just to triple check myself that I'm doing things correctly. All intervals, and why is that not showing? Ah, that's why. Cool. Yeah. So now up at these highs on the 4 hour time frame, that's where we are. So what I could do is move this along, but I think the same would apply. So another daily order block created a couple of days ago, and we're still within that same area. So I'll keep it in its newest position because we then have a brand new 4 hour order block. So let's have a look at what price is doing now. So up at these highs, I wasn't really ready to short for whatever reason. So what we have now is if we say a high was created, potential low or a higher high, we then broke the 4 hour 50 MA, we came back up and we had the move without any solid pullback again. So we've had the low in the market. After a low, we want to isolate the area that caused the low. Here it is. So it really made sense for good shorts, to be honest. Quite annoyed at myself, but nevertheless, at the moment, we haven't made any new lows. So that's something to take into consideration. No new lows have been created from that area. So again, if price wants to come back up, what are we expecting? Just a reaction. We're not necessarily expecting a lower low. We're in the market to find good points of interest to take a position and good places in the market to expect price to react from for our take profits. So straight away, I'm seeing now at this stage, we've closed above that 4 hour 50 MA. Current 4 hour candle, hour and a half left of that. If price wants to move up, that's where I'm going to have to manage my position by. If price doesn't want to come up first and foremost, so we're still pretty much here, armed and ready to take a short position down. Now I just need to make a decision at what type or how I'm going to look to take that based upon the fact by the time we get there, we're going to be very bullish in trend. I mean, we're already looking bullish, breaking structure points to the left-hand side. So if we start pushing up like so, which is of course how we're going to get there eventually, then what I want to see is because I've got two nice areas. No, I don't. Let me just double check that. GCAD was at the bottom of the pile, so you have to excuse me, team. I didn't pay it too much attention. So 15-minute order block is available here, and then up at those highs, that's been mitigated and price moved away from there already. So here is, to be honest, the only position where I want to take a trade from. Now, secondly, what I want to do is understand my range back to the downside to understand how aggressive must I be. So I've got 100 pips towards the downside. Therefore, I think what would be worth to do, considering we're going to be incredibly bullish on the way up, structure point, just isolate it. What's the higher low that caused the high into the area? Wait for the break, pull back, short that down back to the 4 hour 50 minute. I think it's just a textbook type of position, right? Higher time frame point of interest, refine the area down for 15, break of structure on the 15, order block, short, lower time frame break of structure if you want to do so. So that's the best case scenario. I won't go over the aggressive one just yet because we're a bit of a distance away from GCAD. Looking at shorts. Let me see if there's anything more immediate on the 15-minute only, just to tie that off nicely. So what structure doing on the 15-minute time frame? So of course we made a low in the market from here. Here remains a key structure point. We've broken that structure point towards the upside. Now we're looking to isolate 15-minute order blocks that has potentially caused that. So 15 here, you could argue that's available. You could argue it's been mitigated. Price then starts to move along from those areas. 15-minute order block, price comes in, makes the high from here. So price is definitely looking to do something like that. We can see it in the market. So let's continue with that analysis and move on towards the left-hand side. And now here would be the important part. 15, 15. So we'll go for the lowest 15-minute order block that's available, which is here. So if we move that across slightly, that's been tapped, and that's probably why I've got my alerts there. So that would make good sense. So based on the 15-minute time frame only, what do I like? I'm liking the Asia range long position. Now, the difference, is it a difference? Not really. We have this area that you could argue. However, why would I like this? Let's have a look at the range. The range to fill Asia range is tremendous. So if we get price coming back down here, and this is what I mean about the risk reward ratio, whether or not it makes sense to take these types of positions. For me, recognizing that a one GCAD, so probably be stretching it a bit like so, probably more realistic of what I'd be wanting to do. I have to understand Asia available to the lows. There's definitely a reason for me to lose that. This is based on 50-minute price action and time frame only, which in my opinion, I think that makes quite good sense based on the 50-minute time frame. Higher high, higher low, expect the higher high, expect Asia to be filled on more of the conservative play. So I think GCAD looks pretty good actually. What I would be inclined to do, because I did something similar yesterday with GU. Although you can wait for your 1 minute breaker structure and take that aggressively, it's down to you as a trader whether you feel that's the type of position you want to take. You can always be more restrictive. So what I think I will do here is just because of the 15-minute order block below and the Asia below, because there's no real reason why price, based on, let's say, a 1 hour time frame, that would still make sense. Of course, based on the 15-minute time frame, if we break this area, then we're breaking our bias completely. And then what we're going to have to really try and argue is that that's just one move, and then we can still look for the Asia range, which again is down to your discretion. And that down here, I probably would still be quite aggressive and take that long position up here and find a way for that to make sense in my journal. So what I'll do at the lows, here is where I'll be super aggressive, to be quite honest, because here's where I would expect a reaction, probably not a higher high from that area. Here is where I would really be expecting a higher high, but I have more reason to lose if I take a position just here. So what I'd be inclined to do is based on the fact that I have good enough range, I'm going to wait for a bullish 15-minute candle. What that bullish 15-minute candle will do is just give me a bit of certainty that price may well want to respect that area. Once I get that candle bullish, I'm then going to have a 1 minute or a 5 minute order block. As soon as I get that, I'll have price pull back into the imbalance left behind, and I'll look to take that long position. In addition to that, this position down at the lows, I'll wait for just a 1 minute break of structure, which doesn't necessarily mean it doesn't necessarily, well, it may not be, is what I'm trying to say. It may not be a 50-minute candle even closing just yet. Within that 50-minute candle, I can get a multiple 1 minute breaks of structure. And then when that 50-minute candle closes, it could close down here like that. That's the risk that I'm willing to take based on this area down at those lows. So that's your 15-minute candle. As it starts to break structure within the 15 minutes, you're pushing up, pushing up. And then by, let's say, minute 13, you get something like that. When you revert back to the 15-minute candle time frame, you think, oh shit, I've entered a position like that. But that's the risk that I'm willing to take down at these lows based on where we are. So I like GCAD actually. I'm surprised it's so low down the list. We'll give that a green. GCAD's quite nice. So that's what I've got, team, on GCAD. I think that's quite nice on the 15. If I just head back to the higher time frame directional plays again, yeah, down at these lows. No, I'm not really expecting price to want to go down there, so I won't speak about that. Just up at these highs is where I'll be looking for a higher time frame directional short position. So I think let me move GCAD a little bit higher. I quite like GCAD. Did we speak about UCAD? Yep, we did. UJ, absolutely nothing on UJ, team. I'm not even going to waste your time on it. And if I see anything, any alerts start going off that means anything, then I'll let you guys know as and when. But I think that's a healthy amount to really get ourselves stuck into for the week beginning. And then GJ. Well, GJ. I mean, GJ for me, I still don't mind GJ. I'm still getting to grips with GJ. Don't know about you, Boris, if you're looking if you're looking to take EG trades again. That seems a long way away. But EJ, Frank, just for your knowledge, I used to trade EJ, and excuse me, EG, sorry, and the performance on EG was just horrendous. So I swapped it out for GJ. And I'll be quite honest, I've had a few good results on GJ and I've had a few losses on GJ. So there's not too much to talk about on GJ. But what I do in terms of performance wise, but what I do like is it's all in sync. If we look about highs in the market created after a high, what are we expecting the higher low? And then on the daily time frame, we have very clear synchronization in terms of what we're expecting as well. We've had a good leg extension for a high, but in the immediacy, higher highs and lows, higher highs and lows, higher highs, potential higher low. Looking for what? A higher low for the higher high continuation. It makes sense. Then we head to the 4 hour time frame. It's just beautiful printing, just textbook price action structure. Hence why I want to be involved in better case scenario, higher time frame directional long position. So refine that order block down. We're here within the 4 hour time frame. Now, the question that I have is, well, Charles, why that daily order block? At the moment, honestly, it's as a result of this bullish engulfing candle. And what I'm seeing on GJ is when you're getting these huge bullish engulfing candles on the daily time frame, it makes good sense just to use the order block that's left behind. And that process was started just here. But more often than not, GJ is just not pulling back. And it just looks like a really nice trend that kind of you think, blimey, that would be really nice to trade. And it's just not pulling back. But we're in the market for pullbacks. Let's see how we get on. Let me move this alert down. So this 4 hour order block and daily supported long by the 4 hour 50 EMA, 4 hour 50 EMA performance. It's just, if you like sweets, these are Haribos type of thing. So it just looks good. And it's something that I want to get involved in. However, in the immediacy, for me to get involved in a long position, I need price to move towards the downside. So what am I seeing in the inverse? I think this also looks quite nice. If I want price to move towards the downside for me to take a very attractive looking long, can I identify price action to give me an attractive looking short? I've got an Asia range that I quite like. Let me bring it up big as the last pet so we can have a proper look at that. Asia range, what am I looking at? 15-minute only breaks of structure. Lower lows, lower high, lower low in the market created. 50-minute order block left behind? Absolutely. Let me just double check it's drawn correctly. There it is. Is it available? Has it been mitigated just yet? No, it hasn't. So that alert needs to be there. And I'm just waiting for price to tap up into that 15-minute order block. And I'll be quite honest, I will take a half risk Asian range short. The reason for that is I'm not really trading full risk at all on GJ at the moment. I'm still just tracking the performance on it and pretty much taking every type of setup that I know on GJ at very minimal risk. Well, it's not minimal risk, it's half risk positions on my personal accounts. And then I'm just seeing once I start to build the statistics up with that, how I can really trade it higher risk or risking more on my personal and probably on the investment accounts as well. But at the moment, I mean, if you are going to look at a textbook Asia range short position, Asia's available, 15-minute order blocks available, cause the break of structure to the downside, 1 minute break of structure, look for the short. Of course, we have an argument to play for. But if you look at the difference, my stop loss here covers what? Asia to the left, that's available. Asia to the left, that's available. Of course, I can't cover every Asia, but at least the most recent ones, that looks good, right? In my opinion. Compared against what we had earlier, where I was a bit hesitant, I think it was EU, hesitant with the Asias because there were Asias available, and it's kind of like, well, if you expect to fill Asias to the downside, well, why would you not fill previous Asias to the upside? This allows my stop loss to be in a good position, covering Asia's to the left. That's why we have a stop loss, but this stop loss makes good sense. If that's filled, I'm protected. If that's filled, I'm still protected, just about. But the fact is, I'm protected. And with that said, does the range make sense? 1 to 4 minimum. I mean, GJ looking at 20 pips anyway, and still very good risk to reward ratio for a position that is an aggressive position, but I think it makes sense to short GJ to take it back down if you are brave enough and you forget about Asia range and you actually think, well, that to be honest, here's the most restricted part in the market, the 4 hour 50 MA. You're available to do that if you feel so, if you feel to do so. It's available. But taking that as an Asia for me, I just got to be strict and take my position out by Asia lows and just stack the statistics in favor of the Asia range only. If I had a 4 hour order block, then absolutely I'd be looking to ride that back down based on my higher time frame points of interest, and I'll take it down to the 4 hour 50 MA. But unfortunately, I do not. So it's going to be Asia range only. So, team, Boris, Frank, that's what I've got for the day. Milan looks as if it's going to rain cats and dogs, so I probably won't be heading to the golf course. So it looks like I'm just going to have to unpack my suitcases and do whatever the missus tells me to do for the day. So I'll be on the charts, long story short. And yeah, if I'm looking to take anything, then I'll give you guys a heads up. So that would be, yeah, GU, I like Asia ranged. EU, didn't mind the Asia range, but we'll have to look up at the highs. I think it's a lot better based on the move. And then GCAD was also quite nice for that long position. Two types of entry criteria based upon the fact there's two points of interest. AU also liked AU in terms of the short potentially. Just a lot to go over. I'm alert bound today. So when the alerts go off and I'm at the charts, then I'll be posting these up to you guys. Thank you very much for joining, Boris Frank. Appreciate you. I believe, before I let you go, we are back tomorrow as well. Let me just double check the roster. Where are we? So tomorrow is the 22nd. Yep, 22nd, same time. So I'll catch you guys later on today. If not that, then tomorrow morning, same time, same place. Thanks, team. Take it easy. All the best.